there traders, and welcome to Trade the Structure. Now I'm going to talk about a little concept I call the second mouse gets the cheese. Well, I actually didn't coin the term. It's a mentor of mine, Davin Clark, who actually coined it, and it was a great little example of waiting for confirmation, okay? And the way we basically structure our trades, the way I've been taught to structure my trades anyway. And it's around this concept of waiting for some sort of confirmation off a higher low or a lower high. And like I said, the term we call it is the second mouse gets the cheese. So what I'll do is go through an example, and I'll go through the concept, and then we'll just show you through a couple of examples. And one actual trade that I did was on yesterday on the Hang Seng, and that was pretty much the same concept. Wait for the second mouse, be a bit patient, and it made me around 160 points on the downside. So let's get into it now. Okay, so on the screen, what you'll see is I've got two little examples here of what I'm really looking for with regards to a higher low or a lower high, or that concept of the second mouse gets the cheese. So what we don't want to do is, say we're getting the downtrend. This is for an example, okay? Say it's in an uptrend as well, you just flip it over, okay? So reverse of what you're looking at here. But say it was a downtrend here and it's holding, these anchors down, then it starts to break up. It breaks the most recent anchor. Now, what I'm always looking for is that, like I said, that higher low to start to play out, or the second mouse, okay? So I don't want to just jump in on that break, because more often than not, you get a lot of these fake outs, okay? You get the market pushing up through the anchor. You get the breakout traders will buy above that anchor where they're stopped below, and it turns around and reverses on them, and they turn around and get stopped out. Now, it doesn't mean that it's going to keep going down, but it's just easy enough. It can drag in some liquidity above that level there. Okay, dragging some liquidity. They know there's going to be stops above there. They're going to buy to enter the market, and they know that most obvious place is below that the most recent low. Okay, and it'll charge down there, take them out, and then it could turn around and reverse. Actually, there's a really good example which I'm going to show you in a minute, which is pretty much exactly what happened. So what I'm looking for to stay out of trouble and wait for that confirmation that it's going to start to reverse this trend down, or at least get a secondary leg up. I want to be that second mouse grabbing that cheese there. All right, so I'm looking for that higher low. All right, so what you're waiting for is a bit of a flush down, and you want to see that higher level hold. Ideally, it could be this kind of W pattern here, or it could be a straight pullback, and then it starts to ramp back up again. As soon as it starts to ramp back up, you could probably be happy that you can get in, and you're looking for all these sellers to start to get squeezed out, because you have broken this anchor here. You're holding that high low, and you're trading a much better probability, or a higher probability setup there, okay, with a lot more confirmation than just buying that break. Okay, so on the second stage, in the second example here, it's more of you going with the trend, and I'm looking for, the anchor is kind of really extended down, and then you get this secondary push up. Okay, what you do, you don't want to just sell this first one here. Sometimes it works out, sometimes it doesn't, depending on your setup. I like to wait for that secondary push up, because there'll be shorts in there, squeeze out a few more, and then starts to dump there, and I'm looking for that more confirmation as it starts to drive down off this second, push up higher. Okay, and then obviously there's another type of setup too when you get this pop up. Okay, potentially when it's starting to get a bit extended, you might think it's had a couple of legs down. It may not do it again. Then you wait for your lower high. You get your lower high, and then you can dive in. Okay, you can dive in short. Okay, and that's that same concept of the second mouse gets the cheese. You're waiting for that secondary push up just to drag in a few more buys before they get squeezed out of the action on the way down, or you're just waiting for that little shoulder, we call it, or that little lower high coming into play. Okay, so there's sort of two examples of it's one against the trend here when you're waiting for that confirmation of a higher low, and you're waiting for it to charge back up and squeeze out those sellers, or you're looking for something when you're going with the trend on those lower time frames. So maybe this is a 30-minute time frame going down, you're looking for that 5-minute structure. Okay, so let's look at some examples now. One here, if you bought this breakout here, that's a good example of the market's powered higher, it's pulled back, you start to buy that breakout, you can get squeezed straight back out of the action. So you buy your breakout there, and your stop's got to be below, this area. So if you start to just box it up, that's kind of your structured trade. Okay, buying the break with your stop below. And of course, if you're waiting for that secondary confirmation, when it pulls back into that zone, you've probably got tighter wrists there, and two, you've got that confirmation it's going to continue on higher. Okay, but instead it's sort of flushed through, pulled back, flushed up, finished above there. You've jumped in, and it's turned around and stopped you straight back out for a big loss, or a decent sized loss. Okay, now if that's the case there, you're waiting for this market to go down, you didn't get in there, then you start to realize, okay, we're starting to reverse. We're going to hold that trend down with one leg down, it's popped back up, decent retracement. We're looking to head back down and test into the lows. The market's pressed down. You don't really want to get in here. It's had a decent pullback here, and it's kind of that shoulder. This is that example we just talked about in here. Okay, it's kind of that shoulder. You've got this little pop down, flush up, can't get back up to this high, and then it starts to power down again. Break the bottom, stop above, and you're just looking to follow that down into that support zone. This is probably not really, if you're waiting for that sort of same sort of setup here, you're waiting for it to structure, it breaks down below, takes out that low there, comes back in, you want to see it retest before it goes down, and that would have been the trade there, break at the bottom and stop at the top. So if you just took that breakout there, you eventually got stopped out with the break of this anchor to the downtrend. Okay, the anchors are what we're saying is these lower highs all the way in. Once that starts to get broken, then you've got to look at it and think, oh, maybe that trend is changing. Okay, so if you took this breakout here, maybe you got your stop above there, maybe you got a bit further back, I don't know, but generally you would think that you'd have it above the most recent lower high. You've got that breakout there, instead of waiting for that secondary confirmation or the second mouse, getting that cheese. I love that terminology, by the way. You're waiting for it to retest that, support or resistance now, and wait for it to head back down again, and then you can continue on with that trend down, and you've got smaller risk, and you've got confirmation that it's still going to go down instead of just being a flush, which it was. Okay, so that would have kept you out of danger there. Potentially would have kept you out of danger here if you're waiting for you've seen this sort of bounce back up, and you flush back down through that level. You're looking for that, going, okay, if it's going to go this time, maybe that was a bit of a false breakout here. Whatever it is, it starts to go down, it's kept you out of trouble there. You can see that flush there, flush there. Once we start to get this higher low, and it's more of this concept, what we're talking about, that higher low starting to play out, just in here, that's kind of your trade, you're structured up there, off a higher low, back off that same level, you flushed it twice, okay, you've broken this downtrend, you've pretty much gone sideways, we're looking to go back into expansion, and we're looking for the opportunity to press back up when we're putting pressure on these sellers, all right, so ideally, that's a cracking little, I use my MACD as well, and the MACD was starting to expand up, okay, going from that oversold area back to the overbought area. And if you're looking at it there, you're taking a break with your stop below, okay, it's as simple as that, below the higher low. So you know that if you do get in, you've sort of, this little downtrend here, you've broken this major downtrend with the break of the anchor, you've consolidated these lows a bit, and we're starting to head higher. So you know that if that starts to break and doesn't continue on, maybe I'm wrong, and you've got your stop enough that if it does get tagged, you're proven wrong, and you've probably got the whole concept wrong, or something else is happening. Okay, so the fact that it's actually worked out quite nicely, you know that a lot of these sellers in here, when you start to go back up the move, okay, all the way up here, all these sellers are starting to look at that, thinking, look, I think it's about time I'm booking some gains. Okay, this was the trade. This was the support I'm looking at through here. Okay, so with the same sort of concept in mind, we've got that second mouse. So you've got press down. It's had a really good flush of that support zone. You've got about an hour or so there when the market kept heading higher, and you're retesting that. It's now resistance. You're retesting that from beneath, okay? And if anyone that's buying in here, that bought that breakout and is waiting for it to pop back up, hoping that it's going to pop back up above that level, and then we're going to get that move back up again, when they start to realize they're wrong, they have to sell back into the market, okay? Those buyers that are lingering, okay, they don't realize they're on the wrong side of the action, and they're waiting for this market to come back up again. They might have a wide stop. When it starts to head down, you've got two things. They're closing out, they're selling into market, and you've got new sellers starting to pile in once this lower high starts to get confirmed. And my entry was, it was somewhere around about here, just into that low. I gave it enough room, and my stop was above. So basically, that was kind of my, let's just take that off. That was kind of how I boxed up my trade, a little bit lower than that, just off that lower high. Okay, and as it turned out really, really nicely. So that was a cracking trade all the way down. I think it was netted around 160, 170 points all up, probably around 165, I think it was. So it was a great trade, and that was all based off that same concept, that second mouse gets the cheese. Wait for that confirmation. Okay, we're not trying to dive in and be heroes. We're not trying to anticipate this breakout. In this case, it did work. We're trying to minimize risk, but also, if you did buy that breakout there, you've got to remember, you give it a bit of room. Your stop has to be, so your stop now has to be 140 points to be out of trouble. You don't want to just have the breakdown there, comes back up, stops you out and goes. So you have to be, just above a lower high. Now that's a massive stop, all right? So waiting for that concept of more confirmation, okay, when the buyers realize they're on the wrong side of the action and they have to start to close out, and what it does is bring in, like I said, brings in extra sellers. You're kind of outweighing the market. Sellers are well outweighing buyers at that stage, and you get that market, you really start to power down. Right, so that's all I want to talk about. I think it's a handy thing to think about. If you just think about that concept, the second mouse gets the cheese. When you're trying to structure a trade or trying to look at a trade, are you on the right side? Are you going too early? Are you waiting for that confirmation? Okay, and I think it will, at the very least, it keeps you out of that trouble. Let's just go to another trade today. That's the move down, okay? Then we broke up. If you just basically took that breakout, I mean, which a lot of traders do, they've got a line there, that's your resistance zone, maybe it's just structured up there, you start to buy on this move up, okay? Candle extended, you buy in here, or even you buy on this green candle here, the market tends down, you stops below, you get stopped out and turns around and retraces. Okay, so that's what we want to keep out of that kind of a move. When it does something like that, you don't want to buy that move up there. Just because it's broken your trend line doesn't mean you're going to be right. I mean, it can do that time and time again. If you start to look at it this way, the market, well, the Hang Seng does anyway. If you start to look at it, say here, you can see that, okay, we buy that break there. Okay, we got stopped out. And then potentially we're looking to buy, you know, maybe, okay, we've got the line wrong. It's there. Okay, we buy this little break in here and we get it wrong again. Okay, you can see how by not waiting for that higher low to build, or that second mouse concept, you're getting yourself in trouble more often than not. And by the time you get onto something like this, you're really just trying to make back losses as opposed to getting on the winner and keeping out of those losses. All right, so really the trade came about when it was somewhere around, that's that retest there. We've got a double bottom there. I call it a retest fail. You got this market starting to pop up. You could have structure a trade off there. You got a higher low. After the market's broken down, it's starting to go sideways. You've got a higher low to work into. You've even got something, you know, a bit later on here, and you can see the market's been grinding higher since. So it's worked out quite nicely. You know, you're not taking massive risks. You've got a 1-to-1 trade on this one. You've got, you know, maybe you've got at least 1-to-1 on a partial, and you've got 2 or 3-to-1 on that trade there if you structure it that way. Okay, so you can see how just waiting for that confirmation is very, very handy. Thank you very much for joining me, and remember to take a look around the website, www.tradethestructure.com. For more information, there's a free subscription on there. Jump on, have a look around, and remember to take a look at the 5-minute trading day. Currently up around 385%, doing quite well, and that's, you know, really simple trading strategy to look at and to learn about. So it's all on the website there. All right, guys, thanks for joining me, and we'll speak to you again soon.